Do you see it live? Hit go live. Okay, and it says we're live. So I'm gonna follow over here just to make sure because this is new. But it looks like we're live. I just want to make sure.
Yep, I can see it.
You can see it?
Yep.
Perfect. Okay, good. So we're live. Beautiful. Is it public? It's public. Yep.
Yep, looks like it.
All right, good. All right, perfect. All right, now you can talk to me.
You got some bandwidth back, huh?
You know what I'm saying? Like, I don't want to talk for no reason. Like, listen, you know, I mean, I appreciate it, but I definitely, I want to capture these moments and experiences with people, and I want to share it with folks out there. So I would much rather do it in this format. That's why it's public, because truth be told, you know, this is what's going to ultimately, this is what's going to make a difference for not just ourselves, but for other people. And if there's anything that I learned by being on YouTube for 4 years, it's if I could, hold on, if I could have captured all those experiences, then I could have helped a lot more people, I think, along the way. And also people would have been able to better identify with me. So, so there you go. But with that said, one of the things that you mentioned to me earlier this morning, you were talking about not having so much coins in my MetaMask. And you were talking to me about having a hardware wallet. So let's start off with that conversation.
Okay.
What were you thinking? Like, what was your thoughts? What were your ideas?
My thoughts is it's better to have one than not, because if
Better to have one what?
Your hardware wallet.
Okay.
Something that separates your seed phrase from the internet. And so with the hardware wallet, exactly. Okay, so you got it right there.
Yeah, I mean, I have a hardware wallet, and you know, my seed phrases are not tied to the internet.
Okay, so you pulled them off and put a dummy one up.
So yeah, all my those. By the way, that seed phrase that you looked at, I went back and looked. It was a dummy seed phrase. Good. So that was totally. I looked back at my books here, and I realized that I created one, like a dummy seed phrase. So right. I mean, I guess I was smarter than I thought, but just had to make sure. So for all you guys thinking that you're gonna steal my Phantom, like, you know, it's not gonna happen. But I do have a hardware wallet. But you were saying, but my MetaMask, what was your issues with me keeping so much of MetaMask? Because I am still actively trading.
Right. So every time you do those trades, you just click trade, boom, and it keeps going through. With the wallet, every time you do something, you would need to approve the trade with the physical wallet. So for instance, if somebody, I don't know, got into your computer somehow and was able to use your MetaMask, they wouldn't physically be able to use it because they wouldn't have the device plugged into the computer and then know your passcode and then have to push the two little buttons to approve the transaction. So that's all. It's just having something in between you and the internet. So that way, if someone were to get on your computer, like let's say you walked away, I could just say, oh, his MetaMask open. Okay, let me send me a little bit of BNB. Oh, Phantom, let me get some FTM, you know.
Okay. And I get that, but from my understanding, and again, I'm new to this, and that's why we're having these conversations. From my understanding, you know, that applies when you're at, I guess, bigger dollar amounts or bigger thresholds. Just because of the convenience of it, or the inconvenience, I would say, of making trades. So I was taught that, you know, you want to do that if and when you have like larger amounts. And when I say larger, that's all relative, right? So, you know, I would say if you're investing, whatever, let's say you're, you know, if you have 50% of your portfolio, let's say, whatever that is for you, then maybe that amount you want to keep on your actual hardware wallet. And then whatever you're actively trading, the other 50% you can keep on other wallets that are on your, phones or in your MetaMask, or like I have, because I have Kepler wallet, I've got MetaMask, I have Phantom, and I have, those three I have on my computer. And then I have Exodus, Coinbase, Trust on my phone.
There's so many of them.
But because again, the tokens that I have, like for example, AKT is, it's on its own blockchain, right? And then Phantom does better in the Phantom wallet, and so I have different.
So let's say.
By the way, before you do that,
go ahead.
Let's do an introduction. And if you're watching this video, first and foremost, I want to say let us know. We're just starting this out. We're having conversations about crypto, NFTs, Web3. First of all, make sure you like the video. I always like to say that to people. Also, if you're following us, let us know who you are. Drop something in the comments. We're going back, and because this is a new channel, we have less than 1,000 subscribers to date. We're working towards getting to 1,000 subscribers. That's going to give us a whole bunch more features on YouTube. I know this because I built up a 20,000 subscriber channel. We expect this channel to exceed 1 million subscribers is the plan for this channel. We also plan on bringing on additional co-hosts as well, because we'd like to produce content each and every day discussing Web3, NFTs, crypto. So if you're watching this, it doesn't matter if it's a month from now, 6 months from now, or 2 years from now, drop here in this video, because it's one of our first videos that we're doing as a tag team. Drop here in the comments what you'd like us to discuss, what things that you'd like us to cover, any areas that you are considering investing in and you have questions about. We'll go out, we'll do the research, we'll find people that are experts. I myself personally already have 2 people who've committed to coming on our show that are experts who've been doing blockchain for more than 24 years. I know it's exaggeration, actually, but you know what I mean. They've been doing blockchain as long as blockchain's been around. They're kids, right? So there's nobody who's been doing it for 50 years, but they've been out here doing blockchain and teaching it, training people. As they're some of the foremost experts on this technology. So again, Justin and I are having a conversation today. We plan on having more conversations like this. But I want to encourage folks that are watching, that are sitting out there, to let us know first and foremost, who you are. You don't have to say your name, because this is Web3 and it's decentralized. But whatever you want to call yourself, whatever avatar that you want to label, and then also more importantly, which is tell us what you want to know about, what you want to learn, because we're going to be bringing on other speakers, professionals in this space to educate us, inform us, so that we can make better financial decisions when it comes to investing our money, because our money is hard earned and nobody wants to lose it. Let me be the test dummy and do that for you. I've successfully already lost thousands of dollars. So thank you. You're welcome. All right, Justin. So take it away.
Well, I got some more stuff you can test, since you're going to be the test dummy. I got a lot of projects I want
you got a lot of projects you want me to test out?
Test them all right. Blockchains. Yeah.
And you know what? And we may just do that, right? We probably will have a segment where we test out projects and I throw some money in. I'll set aside a budget for testing out projects, and we'll throw some money in and see what happens.
Oh, that sounds.
I think that'd be fun, right? That'd be fun.
Yeah, that would be. Yeah.
Yeah, we throw a little bit of money in, and we'll go ahead and we'll test out projects and see what works, and then maybe we'll do that a weekly segment on the ones we tested out this week and how they turned out. That'd be fun. I'm down.
So back to what we were saying, we don't need a hardware wallet until we get big, kind of thing. So okay. I start off small. I'm staking in multiple different platforms.
Yep.
Through my one MetaMask. If someone were to get a hold of the small account, technically, they also have everything I've staked. So that account can grow and get bigger, but it's not my account anymore, because they probably, once they get it, they figure out a way to lock you out, or just take try to take your funds. But it's assuming that
that's a good argument there, right? Because I am staking. I'm staking cake. I'm staking
staking cake.
Yeah, right. Staking cake. That's kind of
staking. What's staking? Real quick, just
No, let's talk about staking. What's staking? How do you explain staking to people?
I explain it as I'm locking up my money for a certain period of time to gain certain interest or percentage from that locked up money or that locked up crypto. So
Yeah.
pretty much that's all it is. I'm allowing them to probably use it in the background. They're probably doing something with it, investing it.
Probably.
Oh, definitely, right.
Yeah.
And so because I lock it up with them, I get a certain percentage from that. And some of them have lockup periods anywhere between an hour and a year, and some even more.
Okay.
So, and yeah, the longer you obviously lock it in, you more return you get. So,
okay. Yeah, right now I'm staking cake. I'm earning 60% APY. I haven't checked it. I'm going to come back in a couple of weeks and check it. I don't like to check these things all the time just because it makes you crazy. It makes all of us crazy. So I always like to tell you, I'm not a day trader. But I do subscribe to a couple of paid subscription services where they educate me, inform me on making decisions based on research. And then, from there, I make my own judgment calls as to what I want to put my money into and how much of it. By the way, as always, this is not professional advice. This is for entertainment purposes only. We are not giving advice on what to trade, what to buy, how much to buy. These opinions are our opinions expressed only of how we feel and things that we've done, not things that you should do. What do they say when they play those stunt bicycle things? These are done by professionals. I'm not a licensed crypto trader. Justin is not a licensed crypto trader. We're not.
These are not done by professionals.
Okay, these are not done by professionals. These are done by complete amateurs, and we want to have a fun conversation. And for me, one of the things, and the reason why Justin is here is because when I first asked people about, and it's funny, Justin, when I pull up and I look at my MetaMask here, see, I've got my sand, but my RNDR is not here. I'm missing RNDR, and I'm missing DYDX. So it's funny when I switch between computers, some of my tokens don't show up. Like when I'm on my laptop, it'll show up the other tokens, and then when I come in here, I logged in just as we came on. It doesn't show up. But getting back to the conversation, when I first reached out to Justin about this NFT project that I want to do, he was game, he was on board. And then I think at that point he started like going hard in crypto and researching it and learning about it, and he's been hooked ever since. But for me, what I appreciate is that this is such a new space, and there's so many scams out there, and I've been scammed already a couple times. I know Justin's been scammed. Some other friends of ours have been scammed. And, what I want to say is that I really appreciate having a conversation, authentic conversation here online, discussing all of these elements, because like I said, I'd hate for someone to take, and that's making, a guy has a 9-to-5 job and they're making X amount of dollars per week, or they get their tax money that they receive back, $4,000, they put it all in crypto and they lose everything. So that's what we want to avoid by showing people what we do. And that's what the conversation we want to have with folks. And so that's basically the gist, right? And again, I want to bring in other people because every day there's a new crypto project going on, right? Every day someone's telling me about some new thing happening in crypto that I'm like, okay, look, I can't keep up with all this stuff. Like I just don't have the bandwidth. I don't have the bandwidth to learn about staking and hodling and not only NFT trading, which we know about NFTs, but then you can leverage your NFTs to borrow money against it.
No.
And then now I'm talking about, and then nodes, and then shorting crypto. There's just so many nuances that I don't have that kind of time. I still have to run a business. I have my other channel that we discuss government contracts, and for me, again, I'd like to really set it and forget it. And I know that's really not possible to set and forget it, but for the most part, that's the way I like to do things. I'm not looking for any investments that I have to be active in. I already do that in real estate. So really, there's not a whole lot of passive investments. I think probably my most passive investment is my books that I have, that I wrote a book. But again, it makes me $600 to $800 a month. I mean, nothing to snub my nose up to, but it's not enough to leave your day job for, if you know what I mean. So Justin, yes. So that's the gist of everything. That's what we're going to be talking about. That's what we're having. So we definitely want feedback from people that are watching this video, because what I've learned, Justin, is that the initial people that are watching us, that are tuning in, that are paying attention, like we have right now, it says 3 concurrent viewers. I'm sure probably one is you, but there's 2 other people watching this. When it gets to 20 people watching and 100 people watching and 500 people watching, then it's hard to get your questions answered. So right now, today, while things are still small, this is good. This is a perfect time to have your specific questions addressed, right? Like I said, I've already put about 70,000 in crypto. Justin, I know, has put thousands of dollars in crypto, and I'm going to put another 180,000 this year in crypto. So we're going to be doing a lot of experiments, a lot of projects, a lot of failures, and hopefully some winners. Hopefully we do a couple home runs, and hopefully we'll do a couple of third base hits, and and doubles, and a bunch of singles.
That'll be a whole nother thing to talk about, the home runs. What do you do with the home run?
Yeah, so
that's a good point.
So all right, what else, Justin? What else?
Right now, I've been looking at the market, just looking at a few different tokens. There was one that yeah.
Go ahead.
Yeah. All right. All right, you can see this?
Yeah.
Yeah, so I was looking at looks, but there was one that I was interested in of AVAX.
By the way, the market has yesterday, the market was blood red, man.
It was.
I mean, everything was blood red.
So this one came out, I want to say, a few days ago. Someone had told me about this, I want to say right around this area.
Okay.
And this is when I was on that little trip that I was on this weekend.
Yep.
And the friend that told me about that, she's been investing heavily, and she actually got in somewhere close around here.
Yeah.
And I was driving, and she had told me about it. She was like, "Hey, I'm up." I'm like, up by what? It was like, my 400 is at 5,000 now. I'm like, I'm driving, and I'm like, okay, where's the nearest rest stops? Because I need to. But at that point, it was, the money had already been made. So I just thought it was kind of, I was happy that she finally got this break, because a lot of us that has been in this, if you've actively been trying to make money through all the different ways that you can in crypto, which is so many different ways to make money in crypto, to see a success, it was a good thing. So this was a good thing. And this is where, right now, if I scoot over, this is where they are now. So it is.
Now I see on there alpha/WAVX.
Yep.
Okay. So what is that? Can you explain what we're looking at on the screen?
Let me be honest with you. I don't even know what alpha is.
Okay. Right. But but they're pairing up 2 cryptos together.
Yeah. Can you see this?
I can.
All right. Let me see.
Because I actually have AVAX, and I've done a couple of those. I've done some of those with Avalanche and Trader Joe, where I put up 2 tokens, and then on the 2 that I put up, it was supposed to give me some sort of API, but I've done it twice and it didn't work out for me.
Meaning You got
So
it.
you have, see how you have pulled alpha on your screen and pulled WAVAX.
Right.
So I pulled the two tokens together. And again, I saw what you did. You're looking at a snow trace. So I've done that in the past and it did nothing for me.
Nothing meaning like you wasn't able to get in?
I mean, I didn't make any money. The pool would end up being canceled or something. Like I put it in the pool, I didn't make any money, and then they canceled the pool, and you had to pull your money back out. And I've got some weird tokens now that.
You was actually able to pull your money out though.
Oh yeah. I mean, I didn't lose any money.
Oh well, you won because
I didn't lose anything.
Yeah, most of the time in those in that scenario, you don't pull your money out. You get a bunch of drops.
Right. Now, you said you were looking at looks today. What did you find out? What were you? I
just wanted to see what it was doing today. That's all.
Okay.
Yeah. So right now it's at $1.28.
So looks is down, huge.
Hey, look, somebody still believes in it because somebody just, as we talking, looks like a minute ago, just put 50,000 on it. So
somebody put 50,000. That's 38,000 looks.
Dang. So somebody still believes in it. No, but I think once people grasp looks and how to.
So scroll down. Can you explain to people what's the green and what's the red mean?
So the green is buys and the red is sells. So when let me scroll up a little bit. So all of these somebody just sold 16,000. But yeah, so these are sales and buys. And this actually will give you the price that they purchased it for, and you can also see the hash that was used. And so that's technically like their wallet right here. But yeah, sometimes, man, I've been pretty risky with this, and I've looked at new pairs. And so you can click here and you click on new pairs, and it'll show you, for instance, all of the new pairs that was created in the last 6 hours.
Okay.
I've changed it to 5 minutes. And so as you can see, in the last 5 minutes, all of these pairs were created. And then you can also look and see right here how they're doing. But I wouldn't suggest doing this. This is just something I've done to just look and see how people, how fast are people creating these, and then the purpose. Like, I mean, for instance, if I just click on this top one, interesting. You know, it didn't look like it didn't start off well.
So when people create pairs, what is a pair and what does that do?
So a pair is, I'm pairing a token that I created with another token.
Okay.
And so, for instance, on Pancake Swap, let's try Pancake. These pairs, so this is considered a pair that I can trade. So if I have BNB, I can swap my BNB for Cake, and vice versa. If I click here, if I have Cake, I can swap my BNB. And so this is a pair that's created right here. So what somebody has done is they said, you know what, I'm going to buy the Cake BNB pair, and I'm going to put that in Pancake Swap. What happens is when you come here and buy it, and let's say I want BNB, what I'm doing is I'm swapping with someone else that already has those two. That little swap, that transaction, they get a little percentage just because you swapped. And so you can create these things called pair them together. And so now you have this pair, you can make money just by letting people trade with your pair, pretty much.
That's confusing as hell, but that's okay. That's fine.
It is.
I mean, you know, for me, I suggest what we'll do is we'll bring somebody out here who can explain that. But this stuff that you're talking about, none of the stuff you're doing.
Oh, pairing it up?
Yeah.
I got a little bit paired in I have
So I actually have, so it's interesting right there on that Pancake. I have so I have Pancake. Let me see if I can pull it up on my screen. Because I'm used to using this other computer.
It must be a Windows, huh?
I'm sorry?
Said it must be a Windows computer, huh?
Oh no, I don't do Windows computers.
I know.
No, I don't do that. Okay. All right, so here. All right, so here's my cake. So this is what I have staked right here. 262 cakes.
So that's worth, your staked amount is worth about $1,800.
Yep. Right. And
Okay.
I've made 26 bucks off of it.
Okay.
Right.
And so does that tell you how long it's?
It doesn't tell me how long, but I have all this stuff in my notes, so I can go back and find out. I know it's been only about a week.
Okay.
So it's been probably a week. Let's say 1 week though. And 1 week I made 26 bucks. Staking this $1,800. So again, it's not a lot of money, but it's safe for me and it's secure. And for me, like I said, we discussed yesterday, I'm going to have multiple investments, some of them riskier than others. But also, Justin, when you go over and let's look at this, I want to show you something. I haven't seen the markets today, but when we go back to, yeah, same thing. Everything's red. Everything.
That doesn't look good.
So, I mean, the markets have been down, but so everything. And it was the same thing yesterday. So everything has just been crashing and burning. But for me, because, oh, look at this. I don't even know what TAP is. Probably some made up stuff. It's interesting that for me, the way that I look at things is a little bit different than most people. And the way I see it is we've all of us have been hoping, praying for the real estate market to tank so we can invest in real estate.
That's the best time.
But last year, when the crypto market was soaring, everybody's like, oh my gosh, Bitcoin is so high, Ethereum is so high, everything's so high, I'll never get a chance to invest, right? Now things are crashing and people are like, oh my gosh, things are crashing, should I invest? So human psychology.
Right? Yeah, like look, now I'm worried that it's going to keep going down.
Right. Exactly. Yes.
It'll always be a worry.
So your human psychology always makes people fearful, right? They're fearful when it's high already and like, oh my gosh, it's so high, right? I'm at the top. And then they're fearful when it's coming down because like, oh my gosh, is it going to go to zero? Am I going to lose everything? And it's going to bottom out. And it's the same thing. Even though we're praying for the housing market to crash, how many people, when the housing market starts to crash, are really going to jump in and buy? Or are they going to be paralyzed because they're like, oh, well, am I still getting a good deal because it could crash more?
Right.
And that's the human psychology part that I think we all have to overcome. Because it sounds good. Like it sounds good when you read in those articles. I remember in January on Twitter, they were saying, if you have invested in these 10 tokens, you'd be up, this much, $1 million, a Shibu, 10,000, 50,000 Solana. So much, you'd be up, right, for $1,000. It sounds good after the fact. But when the market's like this and it's bleeding red, these are the people that if you had invested, right? This is the point of reference that they come from. Right? So that guy that put 50,000 in Looks at $1.20. When Looks was at $4 when it came out. So his $50,000, if it goes back to $4, right? He would make 100. He'd make 100 grand.
Over 100. Yep.
No, 100 because he's at 150. It's at one. Oh, okay, he's at 120. Yep. So he'd make over 100. You're right. Yep. So he'd make over $100,000.
So I used to see people use this word a lot in the crypto space, and I'm like, FUD, what is that? And so literally fear, uncertainty, and doubt. And that's if it's going down, it's fear. Mm-hmm. If it's going up, it's fear because it's too high. I'll never be able to get in.
I won't be making money. Like you won't be able to make money because it's at the top.
Right. So the best way to get over that fear is just to get in. Period.
Oh, absolutely. I mean, it's the same thing that happened to Facebook. Look, Facebook crashed, right? And I remember same thing. People talked about Berkshire Hathaway, and they're afraid to invest in Berkshire Hathaway because they're like, dude, it's $100,000 per share, right? Berkshire mm-hmm. Hathaway, like that. I'm not going to make any money on $100,000 a share. Well, okay, they were saying the same thing about Facebook, and they were saying the same thing about Amazon and same thing about Tesla, right? Huh?
Google too. I remember I was talking to a banker years ago. He was saying, "Hey, it's $200. I'm telling you, please invest." I'm like, $200 for one? Right. And I thought he was crazy. This was years ago. And it was
right.
It
was
a good time.
Then, but, and you can pull this up on your screen. But when you look at Facebook and their drop off, isn't that the people who were saying that if Facebook was too expensive, isn't that the time to buy up all the Facebook that you can afford? But going back to FUD. That it's that fear, uncertainty, and doubt. So but scroll back. There you go. Right there, that drop. Going 6 months, do 6 months. Look at a 6 month. 6 months.
Okay.
Now go back to a month, forget it, even sooner than that. There you go. So what was it at before? 323.
23. And now we at 201. Man.
Right? So it's at its 52-week low, but again, people are always going to be unsure of themselves, and they're going to question whether or not, this makes sense.
I remember when right before I think I lost like 1,500. I put in 15, and then like a few days later, it just started dropping. And my cousin had told me about that, by the way. Shout out to him. That wonderful thing. But anyway. I said to myself, you know what? I'm so new at this. I can't be upset that, I didn't go to 1 million or this or that. And so I immediately established, hey, everything I'm doing from this point on is practice. So anything good or bad, I'll just use it as, as a way of learning. And okay. So when I did that, when I invested another $100 or $50, I wasn't worried more so about losing it. I was just worried more so about what can I learn from it. Mm-hmm. And through all of the stuff that I've lost, it has brought me to a better understanding of how stuff works. And so, that helps me with recognizing those.
But that's the same thing in any business, any venture, anything to try new. True. Now, what happened to the 1,500?
It's still in there because it's down to 100. And it's called Jade Protocol. That was the name of it. Like that was my first stake I've ever done. And
so you lost one of the stake.
Yeah. I put it was 1,500, and you earn SJ. So you earn their token, and when I put it in, I was earning, and then the next day, and then 2 days later, it just kept going down and down and down and down. And I looked. I said. My cousin said, he didn't even call me. I had to call him. I said, hey, what's going on, man? I don't know, man. You pull your money? I said, no, I'm sitting there watching. And I watched it go down, and it stayed down. And so it was one of those things where, like, if you put 1,500 in and it's down to 100.
Yeah, I mean, at that point, yeah.
I do know, actually, the person I know, she was in that too. And she also lost a lot. And so she pulled out, and that was the person I was talking about earlier, to where she's up right now. But these losses, they help you better in your path.
And well, one of the things that we discussed yesterday also was that, my friend who put an XRP, he invested from 2017, which is now 5 years in the making.
5 years.
So, it goes back to like looks. I mean, obviously I'm down looks. I had, $15,000 in there, probably about $6,000. So I'm down $9,000. But like you said, like we just discussed, other people have had, if it stayed flat for 3 years, what would be the difference? You still would be up. It would be, if it just stayed flat for 3 years straight, it still would have any movement. I also had a token.
Only lose if you take it out.
So I had a token that I invested for in 2018 when I bought Ethereum, and I had put 5,000. One was in Ethereum, 1,000 Ethereum, and 4,000 is the other token. And then 3 years later, when I checked it, that other token was still the same, like $4,000, it was like maybe 3,000. And then Ethereum had went up to $20,000, and that's why they tell you about diversification across the board, because
you put something in, and 3 years later you checked it. You clearly must have forgot about it.
I did. Yes.
Okay. Oh, that's a good thing to remember 3 years later.
Well, I didn't remember. I kind of found it.
So when you put this in back then, you said you bought how much of it?
$4,000 worth.
And when you went back, how much was it?
3,700, 3,800. It's the same.
Okay.
But I had about $1,000 worth of Ethereum, and my 1,000 for Ethereum turned into 20,000.
Okay. That's what I was. Okay. Yeah.
So if I had swapped it, and if I had put 4,000 Ethereum and 1,000 this other thing, I would have 81,000 instead of 24,000.
And here's the thing about this this whole thing. Through that 3 years, it was up, it was down, and and you could have had fear in that process, but because you forgot about it, you didn't have any fear. So when you came back to it, you came back to a profit.
And that's the way I am with all these things. I'm not putting in here money that I can't stand to lose. So for me, and I would not recommend anyone to do that, because there is no certainty in any of this stuff. So I would not recommend anyone to put any money that it's going to cost you to your rent, you're going to be kicked out your apartment or anything like that. So for me, I'm not putting any money I can't stand to lose. So,
that sad money, huh? That's what you're saying?
I hate to say that. I don't want to be, I don't want to talk over the top, but again, the best way I could say it is, I invest in a lot of different things. Including with my government contracting business. I invest a lot of money in software for like courses and stuff. And I've invested 5,000 a pop on modifications to this program. I mean, I've invested well over $35,000 just in, GovCon 2.0, 3.0, like modifying it, getting us. I mean, I probably spent 15 to 20,000 between Teachable and between that other platform that I use, Thinkific, just getting it customized to only not ever use it. Just like to not ever use it, because it then was limited. Like we customized the whole thing out, and then we found there was this other limitation that it would not allow us to customize. And it was like, okay, we have to scrap the whole project.
But you didn't just stop and just say, darn, well,
No, that doesn't discourage me. And the reason why, and the same thing, like even with the NFT project, I mean, I've already spent money. I paid these guys to make this NFT project.
Right.
So, and I'm still paying for it because we got to build a website, right? And so all these things are going to come with it. So I'm constantly investing because that's part of my education. And look, I looked at it, something the other day with Foxy Brown and Jay-Z, and he gave her some millions of dollars for 2 album deal, and then she lost her voice. And so he, saying, look, I'll eat that money and just go ahead and get yourself better. So, look, I'm in here for a long time. I'm not going anywhere. Like I said, I'm going to put another 200,000 in this year.
Right. Okay.
And so I'm going to go out and, make the money and then come back and put it in here because this is the future and I'm betting big on my future. So, we're not going to always hit it right, but we're going to learn and we're going to share our journey along the way. So listen,
I think we all got a little bit of side money though, just a little bit. Whether it's $50, $25, we all got a little side money.
Sure, $50, $25, yeah. Whatever. Again, whatever people can stand. I mean, whatever you think that makes sense for you. But like I said, I own real estate, bro. I remember, I literally on a real estate deal, I lost $30,000 before, and I was in my 20s, so it really hurt. And it didn't hurt. It hurt my pockets, but it really hurt me emotionally because of the person that stole from me. So,
that's a way
that's
different
a bigger hurt than a
to
stranger.
person. Yeah,
And somebody that I knew, that I grew up with, and he promised me this real estate deal. He needed the money as a down payment. I wrote him a check. He, BS me with the contract stuff. Never came through. It was one of those, I have to do it last minute, otherwise we're going to lose the whole deal. We're going to scrap it. And he just basically BS me the whole time, kept my money. I never got the deal. And then he lied and said he lost it. It was taken from him, and a bunch of stories and excuses.
Right. So what did you learn from that? What was the
what I learned from that is that you can't trust even people that are close to you. What I've learned, Justin, personally, is that if someone asks me for a finger, right, I'll give them like a clip of my nail. Somebody, so if you ask, let's say you ask me to borrow $1,000, I'll be like, all right, here, what about 50?
Okay, so I got to start high. So I'll ask you for $1 million, and hopefully I'll be around that 1,000 mark.
That's basically it. Because if somebody's like, oh man, this thing, I'm screwed, and this is not going to work, and I need $1,000, otherwise I'm gonna be kicked out of my place. I'm like, well, what about like $50? I mean, will that help you? No, man, $50 ain't gonna do nothing for me. Oh, okay, all right, perfect. So then that's good. So that's it. The conversation's over with. But it's interesting because I remember a long time ago, people said that, hey, if you were to and I remember this rich guy told me this when I was in college, and I didn't remember it till like later on in life, but he said that people knew he was wealthy, so he couldn't lie and say he was broke and he didn't have money, but he would always say his money was tied up in investments.
Okay.
And that he couldn't pull it out without penalties. So it's like, he's like, hey, I would love to help you out, but all my money's tied up in my investments and I can't pull any of it out without a penalty. The only money that I have that's, freely available is what I used to live off of.
So let me ask you, if some people are watching this, they might be curious. Why would we want to invest in crypto when there's other things to invest in? Stock market.
Well, I invest in a lot of, I have investments across the board. So
for the people that have zero investments, they work and they say, you know what, I want to take a couple dollars and I want to put it towards something. I don't know, it's a house or stocks or crypto. I like crypto because to me, I think it's clearly exploded. If you look at Bitcoin from when it first started and to now, I don't see anything else that has come close to the level of, I don't even know if this is the correct way to say it, the explosion of it. I mean, because if you from 2009, I think it was like under $1. And so you could have invested $2. But I don't, there's no other investment I see that has that type of ability. I'm not saying it is not other things that can't get you to that point. But when I see crypto as a whole, it's 24/7, 7 days a week. It never stops trading. It's always moving. But I know there's a big risk.
But playing devil's advocate, we've just discussed, we've lost more than we've actually made in crypto.
Right. True.
So with that said, with all that volatility, right, that would not, again, playing devil's advocate, that would make it an unsafe investment.
Hey, you got to play the part, because there's somebody out there. No, somebody's listening to that. And they're like, yeah, but you lost.
Right. I'm listening to you, and I'm listening to us talk, and I'm saying it also makes it a very unsafe investment.
Right. No, you are correct. You are right.
So now,
but if I keep doing the same thing I've been doing
Uh-huh.
and I'm getting the same outcome, I got to do something different.
And that's fair, right? That's a fair assessment for you. From my perspective, is different than yours. Um, what I see, and the books behind me, right here, Dollar Crisis and the Creature of Jekyll Island. It says to me that if we look at our history, the monetary system that the government has set up is definitely not favorable to working class people. And one of the things that I've learned a long time ago was in order to be able to compete, right? They always say it's not how much money you make, it's how much money you save, right? But not even how much you save, it's more important how much you invest and what you invest in. And so what I've seen just in my lifetime is even people that grew up poor and impoverished, they still were able to buy real estate, right? And so most of us that come from Black and brown neighborhoods, communities, some of our ancestors, parents or grandparents own real estate. They own the house, maybe they own two houses, maybe they own a farm, maybe they own some farmland. I've yet to meet someone family who do not own it. They may have to go back further in their history to find it, but we've all owned our own land because at one point there was segregation and we couldn't live in white neighborhoods. And so we own land where we live, right? It didn't matter. It was not valuable anyways. That also put us into the capitalist society, which we live in America. So that allowed us through owning your own land. That's a form of investment. Makes sense, right?
Yep.
That investment is what later on was an asset that was allowed to be transferred, or you can borrow against. You can you didn't have to actually go out and work for it. And so learning that at a very early age, and I specifically real estate, me and my family, I helped them to buy real estate properties. My mom had a second house when I grew up. She bought it just to put us in because we lived in a poor neighborhood and she wanted to put us in a better neighborhood. But by the way, thank you for the like, for who just hit the like button on this. Good stuff. So, but the other thing is that with real estate, I was able to see how you could actually take, and again, real estate, say it's $100,000 house, with 10% of the money, $10,000, you could own $100,000 piece of property asset, right? Which is way different than stocks, because to own 100,000 worth of stocks, you had to put 100,000 in. So real estate allows you what they call leverage. And so for that reason, I was like, oh, this is great. You're telling me I can own $1 million worth of assets for $100,000 of cash. And then sometimes you could go out and borrow that cash and still own $1 million of assets and borrow the whole thing, right? Mm-hmm. Borrow without putting up 3-4%. So by the way, if you're watching, there's 4 people watching, drop your questions and if you got questions. So for me, what I saw, Justin, was that real estate provide the ultimate leverage. And so I helped my family acquire real estate, and we did that. And so it allowed my parents to basically retire and not have to work as hard. And so we've had properties for, I don't know, the better part of say 20 years. And my mom, if you count my mom's second house, but it wasn't rental, she's had a second investment property since the 90s. Well, what happens? That gave us power to, like when a natural disasters came, we were able to take out SBA loans, and so we were able to borrow against it. We were able to refinance it, pull money out, and do other types of deals. The issue today that I see is that the real estate market is, we don't know what's going to happen. And I suspect, because if you look at history, the 80s, the real estate market crashed, 90s, real estate market crashed, 2000, you had the market crash, 2008, the market crashed. So if you go back in the history of real estate, the market's always crashing every decade or so, but people forget that. And so they continue to put money in real estate. So we don't know what's going to happen with interest rates this year and where the bubble is going to land. And so for me, I would not encourage someone to buy this. To me, this is the height of the market. Like this is the height of real estate. Like this is at the top of the market. So to me, you don't really have an opportunity to invest in real estate right now. at this point in the marketplace because you're at the height of the market. So, and then with stocks, because the accredited investors who are investing in IPOs make all the money, to me, that's not really a winning strategy either, because with all of this market manipulation and things going on, backdoor trading, and Congress getting involved in trading stocks and approving bills that affect what happens to us. To me, that's also kind of market manipulation. Mm-hmm. And again, if you read any of these books and they talk about what happened to pension funds, all of these private equity companies, all these VC firms, they're taking money from us, right? Teachers union, pensions plan, police union, firefighters union, and they're reinvesting it in alternative assets. And so they really own us. So to me, crypto is the only thing that I've seen where it's a level playing field between, again, and I'll compare this to like when I traveled to a foreign country. In America, right? If you've ever been to a foreign country before, like Dominican Republic or like Colombia or any of those places, right? Like, so I say Dominican because I used to go to Dominican a lot. So Dominican Republic, even broke people can pay off the police, right? So like it's even. Like if you get stopped by the police,
that's saying something right there.
And you have a little bit of money, you can pay off the police. In America, only the rich people can pay off the police and pay off Congress people and pay off politicians. So I like crypto because this is even, right? So the rich people can lose, the poor people can lose. The rich people can win, the poor people can win. There is no
Gotcha.
Where they have the advantage over us. We don't have to be accredited investors to get in on an IPO. You just show a couple of the latest tokens that are being traded. Well, you also gave me an example earlier today of where you could create your own token and people can invest in it, and you make your money and create your own token. It may not have any value, maybe just some sort of gaming token or just some sort of altcoin for you and your friends. But if people invest in it and you make money, you make money. So, but the market does not stop you from doing that. In the outside world, the financial institutions, the government, they're all claiming they're fiduciaries. Really, they're not. And they're the ones standing in our way from being able to create those types of products because they're saying, oh, since you're not licensed, you're not an official bank, you're not a broker, you can't do this. But when those people steal from us, they're not holding them accountable.
No. So let me ask you this. If you had no real estate investments, no crypto investments, which one would you, right now, as of today, which one?
I already said it. You can't invest in real estate now because it's too high.
So it will be crypto.
You can't invest in real estate. I mean, everything. Look, listen, I can show you a property right now in my neighborhood that I was looking at. This is what's happening in real estate. I'm going to show you why this doesn't make any sense. I'm going to show you why right now. I'm going to show you guys. Let me show you something. This is why you can't invest. All right, let me show you guys something. Hold on. Okay. Oops, sorry, I went the wrong way. Let me show. And then we're going to close out with this because I got some work to do.
We are working.
Oh, yeah.
I'm messing with
I got to pay back my money I lost.
Me too.
So here, this is a neighborhood that I want to buy in, right? And this is a house that I looked at. Nice house. It's on the water, right? Okay. You can see my screen, right?
Oh, yeah.
Okay, cool. All right, so check this out. Huh? Yeah, 3.2. Yeah, but check this out. Let me show you something. Okay, so check this out. This house, 2021, last year, somebody sold it for 1.5. June, you see that?
Yep. Okay.
Right. This guy bought it. Hold up. This guy bought it, listed for December and October, and he sold it in December for 2.2. He bought it, so he sold for 700,000. This guy who bought it listed it within 2 months for 3 months.
I was like 2 months. What? $1 million more?
So how can you tell me that this house has appreciated? It hasn't. They artificially created this to do, again, we call this an asset bubble. So they're trying to, honestly, I hope this guy gets stuck with the house.
So you think he's using the everything that went up? So
Yeah,
so as my house.
Right, exactly. But what happens is these are speculative people that come into the market to drive up prices, and they're basically like, if you were on eBay bidding things up, you don't actually own it. You want to bid it up to a high number to make all the money. So, this is a house that I could have bought. And by the way, right, this was never listed. So it wasn't like I had a chance to buy it. You get me? It's not like it was posted for 4.5 million.
And then you went to go put an offer on it. So this was
okay. Yeah. So, and this is what's happening all the time, and in this whole area. So these people are driving up these prices of these homes, and the guy or girl's gonna own it, right? You're now paying $3.2 million for a house that last year was. And again, I know this guy hasn't put anything into it. There's no renovations done in freaking, whatever that was, 2 months.
That's true. That's true over
here.
He
added $1 million in value of the house. So this is the kind of stuff that I watched happen in 2008. That's happening all across the country, where and Zillow is good for that. Zillow, by the way, I don't know if you know this, but Zillow created an artificial market to where they were selling properties that never publicly. They were selling them to private equity firms outside of that were not ever listed.
I can say that's true around here. Every house that I looked at trying to purchase about 4 months ago, all had at least 20 offers on them. And they said, if you're going to put an offer on it, it can't be under 25,000 more than what they're asking for.
So that's why. Look, Zillow reached an agreement to sell 2,000 properties from their home flipping business to a New York firm, Private Platinum Partners. This is what's happening. So with these kind of things happening, look, Zillow's dumping 7,000 homes. That's been priced like $2 billion. Institutional investors. We can't compete.
Yeah, we can't even. We're not even in on that discussion.
You can't even get into that. Look, iBuyer. They buy homes direct and then sell them directly to you can't compete with this stuff. So they Zillow starts buying and selling homes through titling trust, facility allocation of beneficial ownership of properties, special purpose entities, then party to agreements, finance properties. After June, they had $1.3 billion respectively in assets. Provide capital, they reach agreements with Credit Suisse, Cayman Islands, America, Citibank. Come on, man. This is why why it's like it's how can you compete with this entity? So that's why I say crypto, because at the very least it's a level playing field. So listen, man, hey, good talking to you. Good content, and looking forward to having some more conversations. Talk to your girl, and then let's keep it going.
We'll do. No, I think we should do some how-tos and what ifs and.
No, we'll do everything. I'm waiting for the comments in this video from the people watching. Keep letting us know about the comments and what you guys want to see and what you want to hear from. And then Justin and we're going to bring on another person as well to discuss that. All right.
All right.
All right, brother. See you.
Take it easy.
Thanks, guys.